start with Memorial Day weekend. It's an especially big moment for our industry this year as it ushers in the transition of T+1 security settlement across US, Canada, and Mexico. At a very high level, talk about how State Street, as a technology-led organization, has been using innovation to help prepare our clients for this important shift.
Within our kind of ETF ecosystem, there's quite a few changes going on with T+1, as you can imagine. So what we've noticed within an ETF is that the need for expedited data is not only a requirement from a T+1 perspective due to the expedited settlement cycle, but it's also a necessity with the kind of the proliferation of actively managed products that we've seen over the last number of years since the rollout of ETF Rule 6C11. So what that's meant to us, as we've kind of gone through our tech stack and figured out how can we solution some of these things and support our clients, was a lot of a movement towards API and more real-time intraday data. So if we really start and you think about the massive parts of the ETF operations, we'll really start with our Fund Connect technology, which is our order-taking technology for the ETF industry, and how we've migrated that to a full kind of fixed API protocol type situation. So we have real-time messaging available and going back and forth between market participants coming into Fund Connect and Fund Connect communicating that data to not only clients and managers who want that data real-time, but also downstream to other internal State Street systems that Fund Connect happens to be integrated to. So one of those, and it's probably the key one, is our ETF Global platform. That's what's utilized to do all the basket production for an ETF, to create all the necessary reporting, in-kind transaction processing. All of that's done out of our proprietary ETF Global platform. Those intraday feeds into that platform now allow us to take data that historically, and I've been in ETFs for 19 years, so I remember the days when ETFs were all passive and feeds at the end of business was more than sufficient for a passively managed ETF. It's no longer the case. So now we're able to take those signals from Fund Connect and turn around and create intraday reporting for our clients. So which is really helpful for them. The other piece that's really useful for the switch to T1 is that we can take that intraday reporting and we can actually utilize it to begin the settlements process for the in-kind deliveries of an ETF. So we can actually take that preliminary data intraday, create those transactions, and begin the settlement process at that point, where historically we'd be waiting till end of business and next morning to begin that settlement process.
From an FX standpoint, we really anticipated the need for clients to have a more automated type of a solution, especially with the shortened settlement cycles. And you mentioned earlier the affirmation piece of the security trade. Very important. Clients are very focused on that. And we said, wow, you know, with that shortened settlement cycle, they're really going to have a need for a much shortened, condensed time frame to do a foreign exchange to cover that transaction. So one of the things we looked at is an existing product that we had called StreetFX, and we looked at where could we grow and expand that to help fit that need. So another thing that we did in terms of technology is we looked at expanding that reach from an integration point of view using our current technology, but also being able to connect with other areas where we could get a trade earlier in the life cycle. And one of them is actually with DTCC.
So for me and for SSGA, one of the big advantages that we have is the size and liquidity within our business. So our ETF business is probably the most liquid in the industry. The S&P 500 SPDR had 15,000 creations and redemptions last year, the largest which was $20 billion, a single create. It is by far the most liquid instrument in the US market. Our entire ETF lineup is posed towards very highly liquid instruments, which means a large number of creation and redemptions. And very frequently, our clients are asking for expedited settlements. So T+1 is almost a natural extension for us, as we've relied on the organization for that. And then similarly, in our institutional business, we have a very large index book, which clients typically use us for rebalancing their asset allocation. And in the volatile markets we've seen the last few years, very frequently we're seeing large numbers of trades. So last year we did over 3 million trades just in SSGA, totaling around $3.2 trillion. So we put a huge demand on the organization. And this is just one more extension of that. And we are blessed to be part of this organization, to be able to handle that volume, because our clients expect almost perfection in the index business. And all of these things that happen in the background are really one of the things that separate us and really allow for a smooth operation.
You touched on innovation earlier. Let's stay with that for a minute and talking about how innovation is supporting the transition to T+1 in terms of faster visibility of data and information for our clients.
I think it's an interesting point because we've always felt we were pretty quick today with that information. So from a technology perspective, we looked at all of the points where we thought a client may need information faster, more broad, more in-depth information. So we already had a lot of those touch points in terms of internal reporting, right? Connecting, whether it be through Swift messaging, through dashboards, things like that. But one thing we didn't have was actually a view into our system. So one thing that we did that we just rolled out in Q1 is an actual dashboard that's real time to see all of your transactions as they're actually happening. And this was pretty innovative because a lot of our automated trading processes were just that. They kind of happened, they were automated, clients didn't have a view, they would find out after the fact, right? They would get their fill information, they would get their trade completed information sent to them. Now they have the opportunity to be part of that and see it as it's happening real time. And this is something that we've expanded through our Global Link product. So what's nice about that is you're able to see not only your FX transactions, but any of the other products that you're using, like Fund Connect, like some of our algos, some of our other online execution platforms. But with StreetFX, it was a real advantage because as clients look for that automation to be able to connect and get those trades sent automatically, they can also see it real time. So they're hands off, but they're really still hands in it.
I think one of the interesting things for us is the fact that as a truly global manager with 10 investment sites around the world, we have a tremendous need to see executions as early as possible, right? Not only to facilitate FX, but also to begin the settlement process. And remember, when many of our offices are in Asia or in that region, the timing window is very, very tight to get some of this done. And meanwhile, many times what we're doing is if we're selling in the United States, we might be buying in Europe. So we need to figure out what we need to do to get the timing right around the settlement so that cash is available. So selling the US, that's no problem. But when we're buying the US and selling Europe, we have to figure out a way to facilitate that. And this is another way that the organization has helped us, because the earlier we have that information, the easier it is for us to adjust the trading cycle on the other side. And so these types of things are really valuable to us. And that carries over to our ETF business as well, where more and more we're either negotiating baskets, doing custom baskets, which are not just a straight through file pass through. The sooner we can get that, the sooner we can get settlement. That keeps costs down of execution, because with interest rates at 5%, it now costs about 1.5 basis points a day to finance trades. And when you're trading billions of dollars, that's real money and makes a real difference in the competitiveness of our products and our performance.
You know, previously I'd mentioned how we're kind of in an intraday, more real-time basis for an ETF. And I think part of the reason we can actually do that here at State Street is the fact that all of our ETF technology and all the technology across the bank that supports ETFs and mutual funds, it's all proprietary global technology for us. So our ETF technology stack is all proprietary and it's a single solution. So what that means to us is it really means like we can drive the innovation. We don't need a third-party vendor. We're not going to vendors to get upgrades to systems. We have ETF experts internally that work with our ecosystem that want to understand what does the ecosystem need. It's not only what do our clients need, but what do our clients require? What's the ecosystem looking for to make sure that these ETFs continue to be as efficient and cost-effective as possible? And then being able to go and drive those innovations. And once we drive it in one location, it's available on all. And what we tend to notice on the ETF solution side when we're looking globally is that these themes that occur within the ETF industry, they may begin in one location, but they kind of start to make their way around the globe. So if we've built something in one jurisdiction because there's some innovation that's up and coming, you can rest assured that likely in the next year or two, that'll be an innovation in another marketplace that we're already able to support from a day one perspective. So I think having that global proprietary technology really has allowed, and the ETF expertise that we have internally has really allowed us to make sure that we're prepared and we can support any new innovation on a day one basis for any clients in this ever growing, expanding ecosystem.
Let me pivot to my next question, which is around our campaign, and we've named our campaign, "We Can See What Others Can't." And I think you've started to depict some of that, the way that you've thought about it and thought about how we serve our clients. And this alludes to the fact that we touch nearly 10% of the world's financial assets. Talk about how State Street's size and scale and the depth of our proprietary data, which you've touched on a bit, help support clients during the transition to T+1.
I think the size of this organization can be daunting. I was doing a presentation recently for some high school students in the area, and to lay out 40 trillion with the zeros is a lot to look at, and it's a lot to take in. And what I really think is amazing is how quickly those assets move around. They don't sit and be stagnant. They're constantly in motion. The ability of the organization to do that and to facilitate this in 75 countries or so and dozens of currencies, and to allow clients and their multiple managers to get all these things done is truly what's made the ability for the investment management industry to create new products in more and more new types of structures, things that are not traditionally liquid. Loans, for instance, right? Leveraged loans are now becoming an important part of the fixed income world. These types of things allow us to automate that. For years, we've done lots of T+1 settlements, and the organization has really been laying the groundwork for this for years, even though, as you said, this was imposed upon us by regulatory change, and that's something this organization has spent a lot of time and energy trying to prepare for, predicting where regulators might go so that we're well prepared and we're ahead of that curve. That's a real differentiator in the market. There are many custodians in the world that cannot do that.
I love that phrase because I do think that envelopes a lot of what we do. I mean, we all work together here, even though we're in different divisions, business units, but I think it's shown in our products, and that builds out to the trust with our clients. Because, as you say, we can see what others can't. We can anticipate, based on our client base, what we think, where our clients' needs are, where the gaps are. And we've done that specifically with T+1 with the shortened settlement. We knew on the FX trading side that, hey, they're going to have even more of a crunch time, and we're at the tail end now of the process within a 24-hour sleeve. So we can share that feedback. We can work together with our partners internally. And John spoke to the global scale. That's a huge strength for us as well. From a foreign exchange perspective, we trade pretty much 24 hours, 6 days a week, right? We've got a pass-the-buck model. We can talk to our colleagues in Hong Kong. So we've got many clients that may close out the U.S. day, but we can then transfer their activity, and they can get the open of the next market that's open. So they never have to wait. And we have that continuity and that consistency across all of our products. So I think it's a huge advantage for us.
Let me pivot to my next question, which is around our campaign, and we've named our campaign, "We Can See What Others Can't." And I think you've started to depict some of that, the way that you've thought about it and thought about how we serve our clients. And this alludes to the fact that we touch nearly 10% of the world's financial assets. Talk about how State Street's size and scale and the depth of our proprietary data, which you've touched on a bit, help support clients during the transition to T+1.
So I think it's two things, right? So first, we can see what others can't, just internally to begin with. And I think part of that reason is we have the best clients in the world. Our clients are innovative, they're not stagnant, to use a term that John just threw out. They're an innovative bunch. They've really pressed us, and they've made us better at our jobs. So that's number one, I'd say. And then I actually take it a step further and say we can see what others can't holistically as well, because of the commitment that I think State Street has to the servicing side of our business. You can see it every time Ron talks about it on an earnings call, or we can see the fact that we have ETF product teams, NFX product teams that can go and look outside of State Street and look at the ecosystem as a whole, and look not only at what do our clients need us to support, but what do our clients need us to support? How does this impact the individual shareholder living in Iowa, right? And having the resources internally that can make that their full-time job, to understand that full life cycle, it gives us a leg up to understand what our clients want before they ask us for it. And also to help our clients drive best practice, because I mean, the ETF industry is very different than the mutual fund industry or the CIT industry. It's just a different wrapper. It works differently. There are different expectations. So the amount of time I spend educating clients and new entrants into the space, we're able to provide them a leg up just at the beginning. So they don't have to go through and stub their toe the way others have. We've seen it. We've gone through it. We can help you get through this first part and take as much of the burden off of you, so your focus can be productization, manage your strategies and sell your products. Let us do the rest. So yeah, I think it's beyond just internally seeing what others can. I think we externally can see that as well.
Let's pivot a little bit and talk about how our work around the T+1 implementation reflects our One State Street value proposition. And Tara, you talked about this, where we're working across our organization. All parts of State Street are coming together to deliver a better and more holistic experience for our clients and better outcomes for our clients.
I think you've said it well. We're a big strength, I think, of State Street, and our clients appreciate this as well, is we can work together for the better of the organization, whether that be the individual client, whether that be the industry. Many of us here are participants and have an ear in the ground to what's happening in the market real time, right? Whether it be through various trade organizations, committees, conferences, things like that. So what's great is we're able to bring that back and work collectively to increase our products, enhance our products, right? Some of the earlier questions you asked about what we've done from an innovation perspective, that's where a lot of that comes from. It comes from our clients, but it also comes from our ability to look and see and anticipate where we think changes are happening.
Jeff, thoughts on that, the cross business?
I think the easiest way to explain it is, and we can use T1 as a perfect example, right? We have internal steering committees on T1, right? Some of the most senior folks in our organization are on it. I think you're on it, actually. So I am not by any means a DTC affirmation expert, but I know exactly where I can find one. I'm an ETF expert, so they know where to find me. So it's taking that, industry strength, I think, project management, right, and steering committee, and bringing in the experts across all the different business lines that understand the exact impact to T+1 to their particular strategy type. I opened a lot of eyes day one in that steering committee when I explained some of the potential impacts to ETFs that just don't exist to other wrappers, other strategy types, because ETFs have both stock characteristics and mutual fund characteristics. Right. And due to that fact, there are nuanced differences. John mentioned it a few times, like we do shortened settlement today. And we have for a very long time. And part of that is due to the fact that there are stock characteristics and mutual fund characteristics to an ETF. So this move to T1 for some of the other wrappers was similar to when we went from T3 to T2, right? Mm-hmm. All right, we're bringing it in another day. So yes, we have some more expedited servicing. We have some technology innovations that we need to roll out, which is fair. But then when you start to really dig in deep to each individual type of product, each individual strategy, you start to find that, well, there are nuanced differences here. And these nuanced differences may not actually be an impact to State Street, right? It may not actually be an impact to how we go about doing our business, but overall, it's an impact to the underlying strategy, right? So if there's an impact somewhere along the life cycle of an ETF, then from my perspective, that's a potential impact to me. So we've kind of, as a One State Street, went out of our way to say, well, even though there are things specific to the ETF wrapper that are impacted, they may not be a custodian's quote unquote problem. It may be a problem that exists, 2 or 3 areas removed from us. It's a thing that we can actually solution for the entire industry. And I think that's part of what we do, our advocacy for the industry as a whole. And that really came together when I was able to explain to some of our affirmation experts, these are the impacts. I understand how to fix this, this, and this, but what does that mean to you? And really having that ability to have those internal working groups with experts who understand what they're talking about, to be able to work to those solutions was just key. It frankly made my life easier to go and lead the ETF industry in a particular direction that I thought it needed to go to solve this for everyone, including, again, that investor in Iowa.
Global Advisors is well known as an index fund and ETF manager. And one of the underlying principles of that is huge amounts of volume and an expectation that everything goes smoothly. So when you mention some of the challenges in the industry that go on in the background of the problems, that shouldn't be the client's problems or the investor's problems. That's for us to solve. And the fact that this organization can put together this round trip in less than 24 hours from getting baskets out, getting custom baskets out, getting trades back, getting all the way around, get the NAV struck, that all happens really in an incredibly short amount of time. Then settle the trades and start again tomorrow. We can't do our business in Global Advisors without the rest of this corporation, right? We're probably 80% index, and we rely incredibly heavily on what goes on here. And again, it's about the expectations. And all of this allows us to get ahead of the curve, to be innovative, to really focus on really nuanced items in the market and to try new things, to try these unusual types of securities, which will become commonplace in the future.